Welcome to the Investors Trading Academy event of the week. Each week our staff of analysts and educators tries to provide you a better understanding of a major market event scheduled during the next week. This week we will focus on the Bank of Canada policy meeting. The bank's use of the word neutral was new and strategic addition to the rate decision, but in an accompanying document called the Monetary Policy Report, it is clear the bank thinks we're in a brave new world where interest rates will be much lower than what we're used to for much longer. Instead of suggesting rate hikes in the offing, the bank softened its tone and suggested it's in no hurry to raise rates and will do so when it chooses. Bank of Canada Governor Stephen Poloz said the economy has lots of room to grow, suggesting a spate of stronger data points won't sway the central bank from its plan to leave interest rates unchanged at least into next year. During the first 50 years of the Confederation, Canada showed little interest in the establishment of a central bank. It was in 1913 before Parliament formally discussed the subject. Up to the time of the Depression, there was little apparent need for central banking in the scattered and mainly rural economy. In Canada, the continuing British influence was reflected in its preference for a limited number of banks with multiple branches. The first governor of the Bank of Canada was Graham Towers, a 37-year-old Canadian who had extensive experience with the Royal Bank of Canada in Canada and abroad. Over the years, the bank has seen many governors. Mark Carney just recently stepped down after a 7-year term to become the governor of the Bank of England, and Stephen Poloz took up leadership. Mr. Poloz is trying to define the Bank of Canada's objectives as the world emerges from years of financial crisis.